Stocks took a sharp dive as March kicked off, with the Dow Jones plunging over 600 points and the S&P 500 experiencing its worst loss since December. The market reaction came swiftly after Donald Trump reaffirmed that new tariffs on Mexico and Canada will proceed, rattling investors and raising concerns about economic uncertainty. The drop was broad-based, with major sectors taking a hit. Tech, industrials, and consumer goods, all heavily dependent on international trade, saw steep declines. Companies with significant exposure to North American supply chains were hit particularly hard as investors worried about rising costs and supply disruptions. Trump's tariff plan includes steep import duties on select goods from Mexico and Canada, targeting industries like automobiles, steel, and agriculture. His administration argues that these tariffs are necessary to protect American jobs and industries, but Wall Street isn't convinced. Investors fear that this could lead to retaliatory tariffs, increased costs for businesses, and slowdowns in economic growth. The bond market also reflected growing concerns, with yields on the 10-year Treasury note dropping as investors rushed towards safer assets. Meanwhile, the VIX, Wall Street's fear gauge, spiked, signaling heightened market volatility. Market analysts say that uncertainty over trade policies and inflation worries are compounding investor concerns. The Federal Reserve is already keeping a close eye on inflation, and any additional supply chain disruptions caused by tariffs could push prices even higher, forcing the Fed to consider more aggressive interest rate hikes. Looking ahead, investors will be watching closely for any signs of negotiation between the U.S. and Mexico and Canada. If no compromise is reached, we could see further market turbulence and economic consequences spilling over into global markets. For now, Wall Street remains on edge, and the next few weeks will be crucial in determining how markets adapt to Trump's latest trade moves.